Hello and welcome to the Crypto Jungle. My name is Blue and I'm here to teach you how to trade and invest in cryptocurrency using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? I do this every Monday, Wednesday, and Friday at 12 p.m. Eastern Standard Time. This is usually a show where we do live streams, long form content, not usually the best, but today I'm actually en route to Bali, Indonesia. So I'm going to be traveling and staying out on that side of the world for an undetermined amount of time, at least a few months. So I've batched some content for you. I've gotten some educational content that may not be market specific. It may not be, something that's pertinent to the immediate term, but it's a way for us to backtest some of these theories and learn the Wyckoff method. So without any further ado, we're gonna go ahead and take a look at one of the top 5 altcoins by market cap. Not one that is particularly my favorite, but hey, don't hate it, don't date it, just trade it. And that is Dogecoin. So without any further ado, let's go ahead and take a look at the doggy coin. So taking a look at Dogecoin on the weekly. So this was a very long-term accumulation. So there are some certain signals that you want to pay attention to when interpreting a trading range inside of the Wyckoff method. Now, this was the blow off top of the 2018 peak, and then we were having lower lows and lower highs throughout. So it's kind of dealer's choice as to which one was the seller's climax, but since we have the luxury of interpreting, you always want to interpret the range as we begin to show strength. So as soon as you get a higher high, it's time to interpret the trading range to determine if it is in fact an accumulation. A lot of people try to draw these trading ranges and draw these events as they print in real time. You will often find that this is not a good practice to get into because you will be faked out and you will be not seeing the bigger picture. It's best to come at these trading ranges when you are starting to lean towards thinking that there's a possible phase D. So that usually takes many, many months. In the case of Doge here, it took about 763 days. So it takes some time. It takes a long time. So please realize that these cycles don't really change. Humans are always the same. When humans give up on a market, it takes a very long time of the institutions accumulating before we can even get to the point where there is a mania or hype or anything to that effect. So let's go ahead and label some of these things. We're going to go ahead and check out the preliminary support. It looks like we got a nice rally off of this level here, so we can mark that down. I'm tempted to call this the seller's climax, but I'm going to go ahead. You know what? I'm going to call this the seller's climax. So let's go and grab that. Preliminary support is all kind of one level. So it's up to you whether you want to mark it. I guess we could call the preliminary support somewhere down in here. So let's go ahead and mark the preliminary support. Then we're going to grab our seller's climax and our automatic rally. And we're going to draw our trading range. I like to use the parallel channel for this. Drag that across. Open it up to the automatic rally. So that is the width of the range. Secondary test right here. Seller's climax, automatic rally, secondary test completes phase A. So once you have those 3 points, you have completed phase A. Now, Doge did not have a lot of interest, did not have a lot of people really caring about this for a very long time. You can see the advantage of getting into an asset that nobody really cares about. I think the lows of Doge were 1/10 of a cent. So pretty incredible markup. This is definitely the winner of the cycle thus far is Doge. Incredible markup. The longer an asset is sitting in an accumulation, the larger its ability to mark up. It's one of the 3 laws of Wyckoff, which we teach in the virtual classroom and in the Wyckoff Trading Academy. Links down below. One of the 3 laws of Wyckoff is cause and effect. The accumulation is the cause, the markup is the effect. And there's actually a way to calculate price projections with point and figure counts. But I think in the case of Doge, all of those would have been far too conservative. Taking a look at some of these other signals, we just have a long drawn out area of support. So instead of going to the trouble of placing all of these labels, I'm simply gonna, go outside of the book and I'm just gonna call it support. So we've got an area of support here, and that is coupled with an area of resistance. So we can see how flat this area is, and we can see all of the rejection points. Anytime I notice an area of resistance like that, I'll just pick a candle body. I'll pick a candle body and I'll open it up to the candle wick, and I'll identify that area as the resistance. This is the resistance on Doge. Another signal was when we broke for our low. This was the coronavirus pandemic. Really didn't affect Doge because it was already considerably oversold. But we're gonna go ahead and call that the spring. And then we kind of got a fake out break above. So I guess we can call this an up thrust. It's a bearish signal, but we had a lot of up thrusts throughout this trading range, probably due to the illiquidity of this asset at the time. Not a lot of people cared about Doge, not like they do now. Then we got our last point of support. So this was after the spring, we got a higher low. That is where the interest starts to come back in. Again, not crazy just yet, but we start to get interest coming back in. The LPS gave us our sign of strength. Sign of strength, the first higher high in the in years, the first higher high in 3 years. Big deal. Make note of the sign of strength. Now, this would have trapped a lot of bulls because we basically went from here to the wick of the SOS was a 400% move. Don't fall for it. Don't buy these SOS. Don't buy these big green candles. The SOS has to come down and test support. It has to come down and test support. And that's exactly what it did back here with the backing up action. No, not the buyer's climax. Backing up action. After the backing up action, that's when things just get silly. So this candle alone, this weekly candle was 287% to the upside. And that's the point at which you take a position. And then you just hold that position until a distribution begins to show itself. And we have the beginning potential stages of a distribution. Now, it's not confirmed, but this structure is very poor. It's ugly. And even if you sold at the very bottom of this structure, you're up 200x. So it's not a real big deal. When you get in early, you have the luxury of really waiting for solid confirmation. You can wait until the bear market starts. You can wait until the bear market fully confirms that there's no denying there's a bear market, because you're still up. You're still up 200x. This is kind of the strategy that Richard D. Wyckoff and Jesse Livermore would do as well. They would position themselves in spot markets at the right time, in the early stages of the development of the trend change, and they would just hold until the distribution confirmed. Do they sell the top? No. Do they buy the bottom? No. They make all their money in the middle. There is a profound structural advantage to positioning yourself alongside of this market in that way. It's also a common practice for the whales. The whales, there's whales of all different types, but this is a very common practice for a lot of the whales that are huge institutional interests that buy from exchanges, probably buy OTC, and they hold their coins on their wallets. So this is kind of the behavior that we see. And if you learn to identify the footsteps of the whale, you're able to position alongside the whale. So that's what we teach in my group. So short and sweet on this one. I want to thank you all for the patience. If you're new to this channel, typically I am a streamer. I stream every Monday, Wednesday, and Friday. That schedule may change a little bit. I may start start doing some of these more shorter format videos, probably on Wednesdays, but I do like to engage with the community, and I'm kind of, I stream for about an hour. So if you are interested in interacting with me and asking me questions during my live streams, then please hit the subscribe button. And if you want even more access to my content and the other analysts that I have on my team, VIP is the place to be. Links down below. So without any further ado, please, I just want to thank you for joining in. If you have any questions or comments, please leave them in the comment section down below. Don't forget to like, and please trade safe. It is a jungle out there. Peace.